If you're thinking about buying a home in 2026, there's one strategy that could lower your payment dramatically, but almost nobody explains it clearly. It's called a seller paid buy down. And depending on the home, the seller, and the structure of your transaction, it could reduce your payment hundreds of dollars per month in the early years of your mortgage. Yet most buyers either don't know it exists, or don't understand how it works, or assume it's just too complicated to even ask about. So today I want to unpack something very important. Not hype, not headlines, but strategy. Welcome to episode 243 of the Martini Mortgage Podcast. Today we're talking about seller paid buy downs and why they might be the smartest budgeting path for home buyers in 2026. Now, before we get started, I need to make the legal team happy. So I am Kevin Martini, a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, Equal Housing Lender. Now, this podcast is for educational purposes only, and it's not legal or tax advice. All right, with that out of the way, let's talk about something most buyers feel right now, but don't always say out loud. A lot of people want to buy a home, but there's a quiet fear sitting underneath the decision, and it usually sounds like this. What if the payment feels too high? Not the price, not the house, the payment. Because buying a home isn't just about qualifying. It's about living comfortably after the closing table. And if you're like most people like I talk to, you're not alone. You're trying not to stretch every dollar just to say you own a home. You want stability. You want breathing room. And you want a payment that allows you to live your life. Travel a little bit. Save some money. Handle the unexpected. But when people look at mortgage rates today, they immediately assume something. They assume the monthly payment is fixed, locked in, non-negotiable. And that assumption causes a lot of buyers to pause. They start thinking, maybe we should wait. Maybe rates will drop. Maybe next year will feel easier. And that's where something important gets missed. Because in most cases, the seller might be willing to help lower your payment. Not forever, but during the years that matter the most. In every real estate market cycle, leverage shifts. Sometimes sellers hold the power, sometimes buyers do. But in the markets we're seeing right now across much of the country, negotiation has returns. Homes are taking a little longer to sell. Sellers are becoming more realistic, and incentives are quietly coming back. Now, here's where most buyers misunderstand how this incentive works. They assume the seller incentive means dropping the price. But dropping the price doesn't always solve the real problem, because lowering the price a little might barely change the payment. For example, an illustration only, a $10,000 price reduction might change your payment by $50 a month. Sure, it's helpful, but not life-changing. But if that same $10,000 were structured as a temporary interest rate buydown, the payment change could be dramatically larger, sometimes hundreds of dollars per month in the early years. And those early years are exactly when most homeowners feel the payment the most. That's why understanding the strategy matters, because it reframes how you negotiate. Let me simplify this for a second. A seller paid buy down means the seller's contributing money at closing that is used to temporarily reduce your interest rate. The most common structure is called a 2-1 buy down. And here's how it works. Year 1, the interest rate is 2% lower than the note rate. In year 2, your interest rate is 1% lower than the note rate. And in year 3 and beyond, your payment returns to the full note rate. Now, why would this matter? Because the first 2 years of homeownership are when buyers are adjusting financials. You're furnishing the home, learning your new expenses, building savings again after closing. So reducing the payment during this transition period can create real breathing room. And the key point here is this. A seller typically funds the buy down, not you. That means the seller's essentially preparing part of your mortgage payment for the first couple of years, which can dramatically reduce your early monthly cost. Here's something interesting about the current market environment. Many sellers would rather offer incentives than cut price dramatically. Now, why is that? Because price reduction comes with permanent market data. Incentives do not. A seller paid buy down helps both sides. The seller protects their sales price and the buyer lowers their early monthly payment. That's a strategic win for both parties. But the real reason this matters in 2026 is something bigger: uncertainty. A lot of buyers believe mortgage rates will eventually fall. Now, no one really exactly knows when, but many economists believe we could see lower rates in the coming years. And if this happens, many homeowners may refinance. Now imagine this scenario. You buy a home today. Your payment is reduced significantly for the first 2 years because of the seller buy down. Then somewhere in that window, mortgage rates fall and refinancing becomes an option. That means you may never even experience the full note rate payment long term. In other words, the buy down can act as a bridge, a payment cushion during the period when many buyers believe rates could normalize. That's why strategic buyers are starting to ask about this structure more often. Not because it's trendy, but because it solves a real budgeting concern. There's a reason many buyers never hear about seller-paid buy-downs. It's not because they're rare. It's because most people start the home buying journey in the wrong place. They start with the house, scrolling listings, scheduling showings, falling in love with the kitchen and backyard. But the smartest buyers start somewhere far less glamorous. They start with the numbers. Because when you understand your financing strategy first, you unlock negotiating tools most buyers never even know existed. Seller-paid buy-downs, closing cost structure, payment strategies, offer positions, all of those things become possible when you start with clarity. That's why I often say something simple but important. The house is not the first step in buying a home. The strategy is. Now, let me be clear about something. A seller buy down is not always the right strategy. Sometimes a price reduction is better. Sometimes closing cost assistance is better as well. Sometimes negotiating repairs creates more value. Every home purchase is a unique financial decision, which is why strategy matters more than tactics. But when the goal is lowering your monthly payment in the early years, seller-paid buy-downs are one of the most powerful tools available, and many buyers simply don't realize it exists. Instead of asking, is now the perfect time to buy? A better question might be, what strategies exist today that could make buying more comfortably financially. Because markets rarely reward perfect timing. They reward preparation. When you understand your options early, when you stop guessing, you stop hoping, and you start evaluating opportunities with clarity. If buying a home is something you're considering in 2026, even if it's months away, the smartest step you can take isn't rushing into the market. It's gaining clarity. It's understanding what your payment fits your life. It's understanding what strategies exist. It's understanding how incentives like a seller paid buy down might work in your situation and what options you actually have. That's why I offer something very simple: a complimentary and confidential clarity call. No pressure, no obligation, just a conversation about your goals, your comfort level, and the strategies that makes homeownership feel smarter financially. If that sounds helpful, you can schedule a time directly with me, Kevin Martini, by going to callwithmartini.com. Or if you prefer the old-fashioned way, that's totally fine. Just pick up the phone and call 919-238-4934. Ask for me, Certified Mortgage Advisor, Kevin Martini. Most buyers believe the biggest challenge in home buying is the house, but the real challenge is understanding the strategy. Because once the strategy becomes clear, the decision becomes much easier. Seller paid buy downs are just one example of that. They don't change the market, but they change how the market works for you. And in 2026, that kind of clarity might be the smartest move you make. Now, if this episode helped you see that the home buying process is a little bit different, share it with someone who's been wondering if buying a home is still possible right now. And make sure you subscribe so you don't miss the next episode of the Martini Mortgage Podcast. Until next time, stay clear, stay confident, and remember, strategy before structure, because clarity creates certainty, and certainty creates power.